There's an update and technical analysis on Bitcoin cryptocurrency here off the daily interval, and I mentioned it in my previous video. 121 January 21st, 12:13 p.m. trading at spot price 23,240 price resistance. That it would be an objective short trade entry off this key, on the top of this key primary trading range, and with 120-minute interval negative and bearish divergences that had continued to establish on all three indicators. I had mentioned it is a scale in short trade setup now. There would be time to scale in, set some stops right up above that 24,623, and full position short the top of the key, top of the primary trading range, and it has been rejected impulsively to the Benjamin button right off the primary trading range, and that was good for a 6.5% drop. And really what's so significant, we do have a MACD crossover. We do have some little bit occurring damaging momentum indicators playing out here on the daily interval, but really what's taken some definitely a lot more constructive progress is the 240-minute interval here, where you have negative and or bearish divergences that have continued to construct and establish on all three indicators. I actually had mentioned in my Q video that a bounce right off that 22,440 would be an objective long trade entry for a tradable bounce right off this first key, which would have been a potential primary channel range. That was good for a 7.3% in gains for a tradable bounce. We have clearly taken out this primary uptrend line now, minor uptrend line here off the 240-minute interval. Potential setting up a sell signal. Anything's possible. We do have damaging momentum indicators here on the 240-minute interval, and this 236 fibs retracement at 22,347 needs to be held at all cost. This is your big key level. Really needs to be defended heavily by long traders and bull traders for a tradable bounce to the upside. If we do take that out, I would only suspect more downside to come, where support now becomes resistance, and we could have a further downside, bigger wave of selling down to that 382 fibs key fibs retracement, which will coincide with the 204-hour moving average there. Call it a dual line of support, where you could have a potential tradable bounce to the upside as well. But again, anything's possible. We could start to landslide to the downside like an avalanche, and this was a big trade. It could turn into an even bigger trade. But again, anyway, going back to that 236 fibs would be a 7.3% drop, down to 382 fibs retracement at 21,215, support for a 12% crash, down to 50% retracement at 2301 for a 15.9% crash, down to 618 fibs retracement, coinciding with that 19,611 price support, which is big support there for an 18% crash, and then the mother of all support levels, in my opinion, 18,332 that I've been hyping up for quite some time, almost identically aligns with the 786 retracement for a 24% crash. And of all key levels that needs to hold is the 17,109 price support for 29%, call it a 30% crash off this key new primary hidden trading trend line off the November reactionary lows, cuts right through all kinds of reactionary highs and reactionary lows. And this is big support in my opinion, which will also coincide with the 17,109, called a dual line of support. And a lot of these hidden trend lines have a powerful directional move once tapped or back tested towards. So anything's possible. We could dip buyers, long traders, they want to defend this key level at all costs, 236 fibs retracement, and maybe start that uptrend to the upside. And they need to take out these divergences. These negative and bearish divergences need to be burned through at all costs. And what will burn through it? A nice solid break right back up that key daily interval trading range, taking out the 24,623 price resistance. And I would only suspect another massive short squeeze setup to the outside with big at least big support up to that 28. Big pop right above. Nice solid daily providing an objective long entry aggressively on overbought conditions. Not an ideal. The risk reward ratio is not really skewed to that. It's really not a good risk reward ratio unless you're buying that top through 236 fibs support that I had mentioned there, and I would only suspect a massive short squeeze to the upside of that 28,891. Potential even, maybe even potential for a bull flag, a bullish continuation pattern, which would be another 40% in gains right off that first flag pull, where we have your initial first bull flag pull, followed by its flag, and then a big move to the upside. Call it a short squeeze setup up to that 28.91, which would provide an objective entry short, in my opinion, for a tradable move to the downside. So anything's possible. What I do know now is fundamentally it is now becoming a common theme with major tech companies and layoffs that are always, and there are always a ton of skeptics and doubters at the beginning stages of a bear market. Powell came out and said that it is important in the last FOMC meeting that it is important to raise the debt ceiling instead of cutting Congress off from spending even more money. He's encouraging it. And the larger the deficits, without raising my taxes, is not going to take a PhD economist to predict what happens next with the progress on inflation fighting. The US dollar, I do not think the markets cannot handle the truth right now. Powell will do as he's told, and the only way to maintain the United States hegemony is to maintain the dollar. It's either save the dollar or save the markets, save our rich, benevolent overlords, or save mom and pop and the little guys. Who is he gonna choose? It's a nail biter.